Hello and welcome to Travel and Entertainment with Bob. Travel and entertainment deductions must meet specific criteria in order to be deductible. The IRS recognizes that this is an area prone to overreach by business people, so this course focuses on specific examples of when expenses are or are not deductible. This video-based course presents a comprehensive overview of three main areas of travel and entertainment tax law. Section 1 discusses travel expenses in various situations. Section 2 reviews temporary assignments, entertainment, and gifts. And Section 3 covers using a car for business. This course is narrated by myself, Carolyn Weaver, CPA, who presents the travel and entertainment tax rules by following along with Bob as he navigates through fairly typical business scenarios. This course uses a self-study delivery method. The subject classification is tax, no prerequisites, no advanced preparation, course level overview, and the course was last updated in February 2014. The learning objectives of Section 1, Travel Expenses, are that upon completion of this section, the students will be able to determine deductible travel expenses when there is no overnight stay, determine deductible travel expenses when there is an overnight stay, assess when travel by cruise ship is deductible, and calculate deductible travel expenses when traveling out of the country. We're going to follow along with Bob on several trips and events and help Bob figure out which expenses are deductible business expenses and which are not. And no, Bob, everything is not deductible. Bob is a self-employed real estate inspector who lives in Houston. He just started his business in January of this year, and Bob works out of his home. Let's follow along with Bob on a trip to Dallas and determine which expenses related to this trip are deductible as travel and entertainment expenses. Bob received a call to inspect a large home in Dallas, which is about 5 hours away. Bob drives up to Dallas on Monday, inspects the home Monday afternoon, and drives back to his home in Houston that night. What kind of expenses can Bob deduct for this trip to Dallas? First, let's define what travel expenses are. For tax purposes, travel expenses are the costs of traveling away from home for business. These costs should be ordinary and necessary and generally appropriate for your business. Next, let's determine what Bob's tax home is. Your tax home is usually your regular place of business. In this case, Bob's regular place of business is his home. What type of expenses did Bob incur on this trip? He drove his car, so he bought gas, he ate lunch, and he ate dinner. First, we'll look at his car expenses. Since Bob used his car for business purposes, he can deduct car expenses one of two ways. He can use the standard mileage rate or he can use actual car expenses. He decides to use the standard mileage rate. If you want to use the standard mileage rate for your car, you must choose to use it in the first year the car is available for use in your business. After the first year, you can choose to use either the standard mileage rate or actual expenses. But you can't go the other direction. You can't choose actual expenses to start, then later switch to the standard mileage rate. Standard mileage rate. For 2014, the standard mileage rate for the cost of operating your car for business is 56 cents per mile. In 2013, the standard mileage rate was 56.5 cents per mile. It's an easy calculation. He multiplies the number of miles driven times the rate. For example, 600 times 56 cents equals $336. When you use the standard mileage rate, you can also deduct any business-related parking fees and tolls, but you can't deduct normal commuting-related parking fees, such as garage parking at your office. Next, we'll look at meal expenses. You can deduct the cost of meals in the following two situations. The meal is business-related to entertainment, or it is necessary for you to stop to sleep or rest while traveling away from home on business. In both cases, your deduction is still limited to 50% of meal cost. Bob's meals. Let's get back to what Bob did on his trip to Dallas. On his way up to Dallas, he bought a Subway sandwich for $6 and ate in the car while he was driving. After he completed his inspection work, he took his client out to dinner at a fancy restaurant. The total restaurant bill was $250, including tax and tip. What meal expenses can Bob deduct? Lunch, not deductible. Since he ate by himself, this cannot be considered business-related entertainment. And since he didn't stay overnight in Dallas, he doesn't meet the other test for work requiring an overnight stay. Dinner. This is deductible, subject to a 50% limit on meals. Since he took his client out to dinner, this meal is considered business-related entertainment. Does it matter that Bob went to a fancy restaurant? Although you cannot deduct expenses for meals that are lavish or extravagant, there are no specific dollar limits for restaurant meals. The meal expense can be considered reasonable based on the facts and circumstances. Bob took his client to a steak restaurant, which was a typical place to take business clients in Dallas. Bob got another inspection job. This time, Bob decides to fly instead of driving. And it's a 2-day job. He has to stay overnight. Bob has a lot more deductions this time. Bob's San Antonio trip. Bob took a commercial airline flight to San Antonio, performed a home inspection over a 2-day period, and stayed overnight at a hotel. What type of expenses did Bob incur on his trip to San Antonio? His expenses included airline tickets, rental car, hotel, meals, a movie in his room at the hotel, and some sightseeing. Which expenses can Bob deduct? Bob met the test of work requiring an overnight stay. What this means is that all of his meals while away from home are deductible, subject to the usual 50% meal limitation. Additionally, most of his other expenses incurred on his trip are also deductible, such as airline tickets, rental car, and hotel. What else is deductible on a business trip out of town? Typical deductible business expenses include transportation, baggage and shipping, dry cleaning services, tips, and other. The other category can include things like projector rental, faxing, and telephone costs. What's not deductible? Of course, not all expenses you incur are deductible business expenses. Personal expenses such as movies you buy through the hotel TV are not deductible. So the movie that Bob bought at his hotel is not a business deduction. Sightseeing is not deductible either. Some of the other items that are not deductible are fiction books you buy at the airport to read on the plane. If you bought business-related books to read, those would be deductible. If you get a manicure or hairstyling at the hotel, that's not deductible. That's a personal expense. And of course, those souvenirs you buy for your kids are not deductible. Generally, expenses which are personal in nature are not deductible. This trip was primarily for business. All travel expenses for travel within the United States are deductible if your trip is entirely business related. What this means to Bob is that even though he did have some personal activities such as sightseeing, he can still deduct 100% of his travel to and from San Antonio. He must exclude the costs, including the travel cost of personal activities like sightseeing. If he had extended his stay for a few days so he could do more sightseeing, he would exclude the additional hotel, food, and other costs. If he made a side trip to Austin, the cost of the side trip would be excluded. Travel outside the U.S. has more restrictions on deductions. What are Bob's reporting requirements? Since Bob is self-employed, he reports his expenses on Schedule C most likely. He could also report his expenses on Schedule F if he was running a farm instead of being a home inspector. He might be able to use Schedule CEZ if he had expenses of less than $5,000 and met the other requirements for filing that form. He would not file Form 2106 or 2106EZ as those forms are used when you are an employee. Bob travels by cruise ship. Bob took a short cruise to Bermuda where he completed several house appraisals. He stayed on the cruise ship while he was in Bermuda. What expenses did Bob incur? If your cruise states separately the amounts for meals or entertainment, those amounts are subject to the 50% limit before you apply the daily limit. In Bob's case, his cruise price included meals and entertainment, so the 50% limit on meals does not apply. He does not have to allocate part of his total cost to meals or entertainment. When you use an ocean liner or cruise ship for transportation for business purposes, there is a limit on the amount you can deduct. The daily limit is 2 times the highest federal per diem rate allowable at the time of your trip. For fiscal year 2014, the highest federal per diem rate allowable is $374, so the daily limit would be $748. If you attend a convention held on a cruise ship, the rules for deductible business expenses are different, and we'll discuss that next. Bob attended a convention held aboard a cruise ship. Bob attended a real estate appraisers convention, which was held aboard a cruise ship during a one-week cruise to Mexico. He took his wife, who is not in the real estate appraisal business. This cruise was on a Royal Caribbean cruise ship. All Royal Caribbean ships are registered in the Bahamas. Next, we'll talk about why knowing where your cruise ship is registered is essential for determining the deductibility of a cruise convention. Most of the time, you cannot deduct expenses for a cruise convention because you will not meet the requirements. Requirement number 1 is that the convention be directly related to your business. Number 2 is the cruise ship must be registered in the U.S. 3, all cruise ports of call must be in the U.S. or in possessions of the U.S. 4, you have to attach a written statement to your return which is signed by you and includes the following information: the total days of the cruise, the number of hours each day devoted to scheduled business activities, and a program of the scheduled business activities of the convention. 5th, you must attach a written statement to your return which has been signed by an officer of the organization sponsoring the convention that includes the schedule of business activities for each day of the convention and the number of hours you attended the scheduled business activities. You can deduct up to $2,000 per year of your expenses for attending a qualifying cruise convention if all 5 requirements are met. Bob's cruise was on a Royal Caribbean ship which is registered in the Bahamas, and the itinerary included several stops in Mexico. The convention was directly related to his business of real estate appraisals. He does not meet requirement number 2 because all Royal Caribbean ships are registered outside the U.S. He does not meet requirement number 3 because his cruise ports were not in the U.S. or in possessions of the U.S. He would most likely be able to obtain the required written statements in the event the cruise otherwise met the requirements. However, Bob cannot deduct any expenses related to this cruise. The reason you can rarely take a business deduction for a cruise convention is because very few cruise ships are registered in the United States. There are no luxury level cruise ships which are registered in the United States. Next, Bob goes to Paris. Let's review the tax rules for business travel mixed with pleasure and foreign travel. We have examined Bob's trips to Dallas and San Antonio. Both trips were primarily for business, and almost all his expenses were deductible. Now we'll look at what other factors affect your travel expense deductions. Is your travel in the U.S.? Is part of your travel outside the U.S.? Is your trip outside the U.S. entirely for business? And is your travel primarily for personal reasons? Is your travel in the United States? Travel in the U.S. is treated differently from travel outside the U.S. Travel in the U.S. includes the 50 states and the District of Columbia. You may need to determine what percentage of your trip was in the U.S. in order to calculate your deductible travel expenses. Whether your trip was primarily for business or primarily for personal reasons also affects the deductibility of your travel. If your trip was entirely business related, you can deduct all of your travel expenses. If your trip was primarily business related and you made some side trips or extended your stay for a few days for personal reasons, you can only deduct the business-related travel expenses and other business-related expenses such as meals eaten during the business portion of your trip. We saw an example of this when Bob did some sightseeing during his San Antonio trip. Since his trip was primarily business-related, all of his expenses were deductible except the cost of going sightseeing. If Bob had extended his stay in San Antonio for a few more days to do some more sightseeing with his wife, he would still be able to deduct his round-trip airfare and all expenses incurred during the business portion of his trip. He wouldn't be able to deduct the cost of his hotel and meals for the extra few days he extended his trip, and of course he could not deduct any costs associated with his wife joining him, such as her airfare. Is part of your trip outside the United States? Bob occasionally gets requests to do real estate appraisals in Mexico City. If he drives to Mexico City, his travel from Houston to the border of Mexico is travel in the U.S., and the travel from the border to Mexico City is considered travel outside the U.S. Any part of his business travel in the U.S. uses the rules for travel in the U.S. Next, we will discuss the deductibility of travel outside the U.S. Is your trip outside the U.S. entirely for business? If your trip outside the U.S. is entirely for business, it's very easy to determine what's deductible. All expenses are considered deductible business expenses in this case. But the IRS recognizes that many trips outside the U.S. will include some personal activities, and therefore they have 4 tests to determine if your trip is considered entirely for business. 4 tests to determine if your foreign trip is primarily for business. You're considered to have spent your entire trip on business if you meet any of the following 4 tests. 1. You do not have substantial control over arranging your trip. This rule usually applies to an employee who is reimbursed for travel and is not related to his employer and is not a managing executive. As a small business owner, it is virtually impossible for Bob to meet this rule. He can, however, still fall within one of the other rules. 2. You are outside the United States for 1 week or less. In counting the days, do not count the day you leave the U.S., but do count the day of your return. 3. You spend less than 25% of your time outside the U.S. on personal activities, regardless of the total length of your trip. In counting the days for this rule, you count both the day you leave and the day you return. 4. You can show that a vacation or other personal reason was not the main consideration for going on this trip. You can use this rule even if you do have substantial control over arranging the trip. Is your travel primarily for personal reasons? Let's say Bob and his family decided to go to Disney World for 1 full week. One afternoon, Bob met with a potential appraisal client for 2 hours. Even though Bob scheduled a business meeting during his trip, this did not change what is really a vacation into a business trip. The purpose of the trip was still primarily for personal reasons. Bob can deduct any expenses associated with his meeting, such as mileage or renting a computer for the meeting, but he cannot deduct the costs associated with traveling to and from Florida or his hotel costs, because this trip was primarily for personal reasons. Summary of Bob's trip to Paris. Bob flies from Houston to Paris, where he spends 14 days on business and 5 days on personal matters. He spent 1 day flying in each direction. His total time in Paris is 14 days for business and 5 days for personal activities, with 2 days for travel. His time spent on non-business activities is less than 25% of the total time abroad, calculated as 5 days divided by 21 total days, which is equal to 24% of the time spent on personal matters. Based on this calculation, Bob meets the criteria that he spent less than 25% of his time outside the U.S. on personal activities. Therefore, Bob's travel expenses to and from Paris are deductible, as well as his expenses for the 14 days of hotels, meals, and other business-related expenses. Expenses associated with his 5 days of personal vacation time are, of course, not deductible.